Good morning, I am Nicolas and you are watching The Hot Topic. On the radar this week is the euro dollar with the upcoming ECB meeting this Thursday. So what's in store for the euro? The European Central Bank will be holding their press conference directly after the Governing Council's monetary policy meeting. Similar to the Fed's, the ECB minutes for the September meeting showed that the ECB is concerned about the global economic outlook, especially the slowdown in China. Before we go any further, let's look at what the ECB actually does. The main objective of their monetary policy is to maintain price stability in order to encourage economic growth and job creation. It does this by adjusting interest rate levels, aiming to keep inflation below but close to 2%. However, lower commodity prices, a stronger euro, and lower growth prospects are threatening the eurozone to enter deflation, which is a general decrease in the price level of goods and services. Actually, the inflation rate last month fell to minus 0.1% for the first time since March. Since the ECB is already holding interest rates at record lows, the only effective alternative measure to revive the economy is to pump money directly into the financial system. So, in March of this year, they introduced the QE program, quantitative easing, which is purchasing sovereign bonds and securities from institutions. The aim is to stimulate spending and encourage investments. But the effectiveness of the program is being questioned, so economists predict that ECB President Mario Draghi will repeat his pledge from September to add more stimulus if needed, even though such an action will be admitting that the program is not as efficient as it should be. While plans are to run its 60 billion euros of QE until September 2016 in an attempt to stimulate growth, inflation and bank lending, market participants are on the watch for any extension or reductions to the program in order to make it more effective. The meeting should not provide further clarity, but is likely to be seen as an intermediate meeting ahead of the December one. Only 1 out of 43 analysts in a Bloomberg survey expect the ECB to step up its QE program in October, whereas 51% expected in December. Some analysts said that the ECB will boost its QE firepower to 80 billion euros in December, but an announcement this week cannot be ruled out. So what are we expecting for in this week's meeting? Though most traders and analysts believe the ECB will wait until December meeting to announce anything new, they see a risk that additional easing measures could be flagged this Thursday and are betting that the ECB President Mario Draghi will at least try to talk the euro-dollar down. So, any dovish shift in the ECB language will be seen as increasing the odds of more stimulus and likely send the euro broadly lower. From a technical perspective, the support of 111 and the resistance of 117 are the two levels that contain the recent rage in its price. It is almost certain that the pair will move to either one of the two directions depending on Draghi's speech on Thursday. That's it for this week. Comment below and share with us your insights on the euro. I'm Nicolas and you have been watching The Hot Topic.